If you're thinking of buying, selling, or investing in Florida real estate, then this is the video you need to see. Florida was once the dream: beaches, sunshine, and affordable homes. But in 2025, something's changing. Home prices are stalling, inventory is rising. Buyers are backing out, and in Southwest Florida, a troubling trend is taking shape. This isn't a seasonal dip, it's a shift. A quiet collapse is happening right under our feet. And the reasons go far beyond high prices and interest rates. Because the signs are everywhere, cracks are forming in a market once considered bulletproof. Let's break down why the Southwest Florida housing market is slowly crashing and what this means for the future of one of the most talked about regions in America. Before we dive deep into the numbers and stories behind this collapse, make sure to subscribe and like this video. Your support helps us grow this channel and keep producing real estate insights like this. Southwest Florida includes areas like Naples Fort, Myers, Cape Coral, and Sarasota. These cities saw some of the fastest growth during the pandemic. Remote workers flocked here, retirees cashed out from northern cities. Demand was so high that homes were selling within days. Bidding wars were common and prices soared, but now the trend is reversing and fast. One major factor is affordability. Median home prices in parts of Southwest Florida jumped over 40% in just 2 years. But incomes did not keep up. Locals found themselves priced out. Investors who once bought homes in bulk are now pausing. Some are even selling when people can't afford to buy, they either rent or move. And both are happening now. Interest rates are another key pressure point. When rates were near zero, monthly mortgage payments were manageable. But in 2024 and into 2025, the Federal Reserve raised rates to fight inflation. That pushed mortgage rates above 7%. Suddenly, that $500,000 home now costs hundreds more per month. That scares off buyers and slows the market down. Home builders added fuel to the fire. During the boom, construction exploded. New developments popped up in every direction. Builders raced to meet demand. But when demand drops, those homes sit empty. Now many builders are offering incentives, slashing prices, or delaying new projects entirely. That overbuilding is starting to backfire, especially in suburban areas. Insurance costs are also skyrocketing. Florida is no stranger to hurricanes and climate risks. But in recent years, insurers have pulled out of the state or raised premiums dramatically. Some homeowners now pay tens of thousands per year just to insure a modest home. That added cost pushes many buyers away and forces some current residents to sell. Climate change is a growing concern too. Flood zones are expanding. Sea level rise threatens coastal properties. Even minor storms cause major damage. Buyers today are far more cautious. They're asking questions about elevation insurance and flood history. And in some zip codes, homes are sitting on the market far longer than before. Remote work was once Florida's biggest selling point, but many companies are now calling workers back to the office. People who moved from New York or Chicago for remote jobs are realizing they may need to move back. That shift is reducing demand. Vacation home markets like Southwest Florida feel it first, especially areas with high second home ownership. Population growth is slowing down. For years, people moved to Florida in droves. But now rising costs and climate worries are making some think twice. Migration data shows fewer new residents compared to past years. And when fewer people move in, there's less demand for housing. This slows sales and begins to apply downward pressure on home prices overall. Sellers are holding on to unrealistic expectations. Many still believe their home is worth peak 2022 prices. But buyers are walking away. This disconnect leads to longer listings and more price cuts. In some neighborhoods, it's common to see multiple reductions before a sale. This pattern signals a cooling market and growing desperation among sellers. Foreclosures are starting to tick up. especially among investors who over-leveraged during the boom. With higher interest rates and slowing rent growth, their cash flow is shrinking. Some can't keep up with payments, others are choosing to exit before things get worse. This adds more inventory to the market and contributes to falling prices. Rental demand is also changing. During the boom, rents skyrocketed. But with more apartments and homes being built, competition is fierce. Some landlords are now offering discounts or free months to attract tenants. When rents drop, property values follow. Investors are noticing the shift and pulling back from new purchases in the region. Cash buyers once dominated the Southwest Florida market. But that's changing too. Even wealthy buyers are more cautious now. They're looking elsewhere for better value. Some are turning to other southern states with fewer climate risks. Others are simply waiting for prices to drop further before jumping in. The cash that once propped up the market is fading. Tourism is another key factor. Florida relies heavily on seasonal visitors. But with inflation rising across the country, travel is becoming a luxury. Fewer tourists mean fewer short-term rental bookings. Vacation homeowners are seeing their profits shrink. Some are selling while they still can. Others are being forced to reconsider their investment strategy. Local governments are struggling to keep up. Rapid growth strained infrastructure. Roads, schools, and hospitals are overwhelmed. Now with budgets tightening, some cities are cutting services or raising taxes. That makes certain areas less attractive to potential buyers. People start to look elsewhere when the basic amenities can't support the population. Investor confidence is slipping. Hedge funds and large property firms were once bullish on Southwest Florida. But recent quarterly reports show they're pulling out or slowing their acquisitions. These players see what many local sellers don't, that the market is softening. And when the big money leaves, it's usually a sign that smaller investors should too. Mortgage applications are down significantly. Fewer people are applying to buy homes in Florida, and this isn't just a seasonal trend. Lenders are reporting sustained drops in activity year over year. This suggests deeper issues. Buyers are nervous. The fear of buying at the top and watching values fall is keeping many people on the sidelines. Real estate agents are feeling the pressure. Listings are taking longer to sell. Open houses are quiet. Price reductions are common. And commissions are shrinking. Many agents who thrived during the pandemic boom are now struggling to find clients. When those on the ground start sounding the alarm, it's often a sign that a market correction is underway. Local job markets can't keep up with housing costs. Wages in tourism and service industries haven't risen enough to match home prices. This forces younger residents to leave the state in search of affordability. It also discourages essential workers from moving in. A community needs more than luxury homes. It needs people who can afford to live and work there. Overbuilding is catching up with the market. New construction boomed during the pandemic, but now demand is slowing. Many of these homes are sitting unsold. Builders are offering discounts and perks just to close deals. In some areas, entire developments are half empty. The oversupply is pushing prices down and putting stress on local markets. HOA fees are rising sharply. In many gated communities, fees have doubled or even tripled in recent years. That extra monthly cost is turning off buyers. Some associations are also struggling with deferred maintenance costs, which leads to even higher fees. When people realize how expensive it is to live in some communities, they walk away. Property taxes are rising. As home values went up, counties reassessed properties and raised tax bills. Now with prices flattening, those high taxes remain. It's creating financial pressure on homeowners. Some retirees on fixed incomes are especially vulnerable. They're being forced to sell because they simply can't afford to stay in their homes. Southwest Florida relies heavily on seasonal buyers. These snowbirds used to drive the market during winter months. But in recent seasons, that influx has been weaker. Economic uncertainty and high travel costs are keeping many away. Without this seasonal boost, local markets struggle. Homes that used to sell in days now sit for months without offers. Investors are flipping fewer homes. House flipping was big business in Florida during the boom, but now the numbers don't work. With high renovation costs and lower sale prices, the profits are gone. Many flippers are cutting their losses. Some are stuck with unfinished projects. The quick money that once flowed through the market is drying up fast. First-time buyers are staying away. Affordability is just one issue. Many are also afraid of buying at the peak. They've seen what happened in 2008, and they don't want to be underwater on a mortgage. Some are choosing to rent, others are leaving the state. Without these entry-level buyers, the foundation of the market becomes shaky and unstable. Retirees are rethinking their plans. Florida has long been a retirement destination, but rising costs and climate risks are changing that. Some retirees are moving to the Carolinas or Tennessee, where it's cheaper and safer. Fewer buyers at the top of the market means less demand for mid-range homes. It all starts to ripple downward through the market. Hurricane risk is becoming more than just fear. The last few years brought major storms that devastated entire neighborhoods. Recovery costs are high, insurance payouts are delayed. Some areas still haven't fully rebuilt. This trauma is fresh in the minds of buyers, and it's making them think twice before investing their savings in coastal Florida. Home equity lines of credit are harder to get. As home values stall, banks are tightening their lending. That means less money for renovations or repairs. Homeowners who once used equity to finance improvements are now stuck. This affects home quality and curb appeal. Buyers notice. And homes that once seemed like dream properties now feel overpriced. Appraisals are coming in lower. This creates problems for sellers and buyers. If a home is under contract for $500K but appraises at $460,000, the deal often falls apart. Lenders won't approve the loan. Sellers have to reduce the price or risk losing the buyer. This cycle adds stress to the market and confirms what many fear: values are already declining. Overpriced listings dominate the market. Many sellers are chasing yesterday's prices, but buyers are savvy. They compare listings, research neighborhoods, and wait for deals. This standoff slows transactions. Eventually, sellers have to face reality and cut prices. By then, momentum is lost and the neighborhood comps begin to reflect the decline. Even developers are pulling back. Projects are being delayed or canceled. The risk is too high. They're sitting on land rather than breaking ground. That's a sign they don't believe in the short-term upside. When builders lose confidence, it trickles down fast. Jobs slow, sales fall, and the growth narrative that drove demand begins to fall apart. Investor forums are full of exit plans. People are asking how to sell fast, how to cash out before the market drops further. That's panic in slow motion. It's not loud, but it's real. When investors talk like that, it shows the shift is already happening. The smart money is getting out, and they're doing it before everyone else catches on. Storm preparation costs are rising. Shutters, backup generators, flood-proofing, all of it costs money. Buyers factor that in, and some choose to walk away instead. It's not just about the weather, it's about the ongoing burden. And when that burden feels heavier than the reward, people hesitate. That hesitation is breaking the Florida housing cycle. Southwest Florida had its time in the sun, literally and financially, but markets don't go up forever. And when they fall, they don't fall all at once. It starts quietly, a listing here, a price cut there, then suddenly everyone feels it. That's where we are now. The quiet phase is ending, and a more visible correction is just beginning to unfold. Thanks for watching. If you found this video helpful, check out our last one where we reveal how AI realtors are changing the industry and what it means for real human agents. You won't want to miss it.